Hey, fellow traders. Today I wanted to kind of give you guys a little insight on something that is basically a main separator between a professional and an amateur trader or retail trader. And it's something that you can actually apply right away to your trading to actually see basically an immediate benefit. So basically, right away, correctly with me. Basically, that one simple thing is you're just going to simply set a max daily loss. But you're not only just going to set a max daily loss, you're also going to set basically a attainable target for each day. And then you're going to want to make sure that you stick to it. And I know you probably heard a few other channels may have mentioned this. I know it's a pretty common thing to actually talk about, but I've actually got something set up in the back behind our little screen there to actually kind of go through and show what it would look like overall and actually how important this is and how much it could actually affect your overall outcome. So let's say, for example, you're starting with a $1,000 account. It's a pretty reasonable size for most beginners and entry level traders. A lot of times you'll have between $100 to $1,000 starting out. But let's say, for example, that you didn't set a daily loss. You just trade, and your goal is to make money every day, something that you're probably not going to ever be able to do. Every trader experiences losses. Bad days happen. You can't be on all day, every day. It's just, you have to understand that you are a human being, not a machine. But let's just take this for what it is and kind of demonstrate what it would look like in the account over just a short period of time. And you'll probably kind of notice and pick up on this pattern and may realize that you're actually doing it yourself. And we'll look at it both ways. And if you don't have a set loss and if you actually did use a set loss. So let's say, for example, you start out on the first day, you may make like $87. So great, you had a good day, you actually came up, you actually made about 8%. It was a fantastic day. And then let's say the second day, you probably didn't do so well, but you still did a little bit. You made $45 that day. But then let's say on the third day happens and you're having one of your off days, you just keep losing over and over and over and over again. And eventually you get down to a point where you have actually lost, we'll say, for example, maybe $350 because you just had one of those really bad days and you just kept going. And then, as you notice, that has already seriously taken our balance down quite a bit by 218 just by having that one big day. You wiped out not only your 2 days of gain, but you also put yourself in the hole quite a bit more than what you're gaining per day. So this keep this in mind because it's going to come in handy here in just a moment. But then let's say, for example, you're now having a rough time, that loss is affecting you, and then but maybe you have a good day today and you make a little bit more. You make 27. And then the next day you end up doing terrible again because you just haven't relaxed from that loss. And now suddenly you've lost close to half the account just because you kept going and going and going. And then now you're looking at all this like, how are you going to make all this back? It's starting to look a lot like it's going to be a lot more difficult to get all of this back. You're almost down 50% at this point, and you haven't even traded but a full week. So basically, by applying a max loss per day, so let's take, for example, if we average this together, let's see if I can get this to do this real quick. So we average about $53 of gain per day. So if we set a max loss, even just at a 1-to-1 risk reward ratio, let's say, because you can actually, just like risk reward applies over each trade, you can actually apply risk reward to your daily balances. So this will actually keep you in check. So if overall for the day you're not doing well, it's going to happen. Now you take a small loss, just like you would take a small loss in a trade. But then when you win, you try to win twice as much or at least more than 1-to-1 of what your max loss per day is. So if our average is 53, and let's say we wanted to set our max loss, we'll just set that at $50. So if we work with that as a max loss, and let's say, for example, we hit our max loss and we even tried one more time just because we're being stubborn and we lost $58 that day. Now notice how big of a difference that makes on your account. And then the same thing again, but this time you got smart and you're like, all right, I'm close. I don't really have enough to risk a little bit more, so I'm just not going to take that trade. Now, do you notice what happened here? In the end, you actually made money just by controlling yourself on these losing days and letting your winning days happen naturally. So that right there can sometimes instantly switch you from being a constantly losing trader to a consistently profitable trader just by making this one simple change. Now, there's one other thing you can do that may potentially improve this, especially if you're in the early stages of your trading journey and you just feel like you want to spend more time on the chart because you think, okay, more time on the chart means more money in my pocket. That is not the case, and 99 times out of 100 you will always end up losing your gains and eventually having a losing day. So it's kind of recommended to actually set a max gain as well. So in the case of this example here, if we were using $50 for our max loss, we may want to look at $50 or $75 or maybe even $100 for the max gain. But you have to also understand that trading works in percentages. So in order to make the gain, you have to make the risk. And sometimes making gains is a little bit harder because you have trading costs involved, fees, swaps, so on and so forth, depending on how you trade. So you kind of have to account for those as well. So it's a little bit more difficult to go forward than it is to go backwards. That's why putting this maximum loss in will actually right away will make a significant improvement to your overall outcomes. Because if you lose it, of course, you have to make it back. And if it's harder to make it back than it is to lose it, it's much easier to continue losing and blowing out the account. So that's just the basic principle behind that works. So let's say, for example, you wanted to just do a 1-to-1. So we'll just say we'll do a $50 max gain. But if we have a trade on that just keeps going well, then you let it run. And let's say, for example, you had that runner on the first day. Great. Now today you were trying to catch that runner, but it came back to the stop. So you'll just sit right there at 45. And then even here in this example where we only made about half of what we were looking for, let's just say, for example, we didn't have much time to trade or we didn't find a setup or nothing really worked out that day. Even still, with these kind of working out as the average, even making that 1-to-1, you can still see how even if we ended up losing again today and lose 51, well, you may be a little bit short because of your fees, commissions or swaps, but just by putting in that maximum loss, you're actually doing yourself a huge favor in the end. And the main reason I always kind of advise to do your basically try to set a target to aim for and stop when you hit that target is because very often you'll see it happen where you'll start to make that gain. You might lose one or two, and then you make a little bit more gain, and then now you hit your target. And now you may keep going, you may make a little bit more, but eventually what's going to happen is it's going to be just like it is on a chart, on a price chart. Eventually your uptrend is going to break. You're going to get tired. You're going to start missing things, making mistakes, and you're just going to slowly eat yourself all the way back down to where you started and eventually just keep going lower. So I always kind of advise pick a target to stop at. And once you hit that point, you stop. Then the next day comes in. Maybe you had a rough start, but you finally get one. You hit that, and you stop. Now you're good to go, and then you don't end up doing this and then coming all the way back in one day, because that right there is going to hurt just as much. To lose all the gains you just made is going to hurt pretty much just as much as having a bad losing day. So just save yourself the hassle. Don't even worry about that part of it, and just hit your target and be done with it for the day. Go on about your business. Do whatever it is you want to do. Go out and just, whatever you're into, get to it, because you will eventually, like I said, I mean, you're just going to get tired. Eventually, things are going to start to work against you. You may lose the volume. Like if you start to trade in the early New York session, then towards the late afternoon, you may start to lose volume. And that could actually cause you to just make careless trades. You could cause you to get false setups. And it could just end up getting you trapped in a trade that price is not moving very much from. So that's another thing to look out for, and another thing that's potentially going to happen. You're going to have some great volume at the start of the session, but eventually it's going to kind of slope down, so you'll have a real sharp ramp up, and then eventually it's going to slow down, and eventually price is going to not go anywhere. It might have a little bit of pickup at the end, and then that's it. So most of your volume, most of your trading, and a lot of times most of your wins are going to happen in the highest volume because price is moving. And then once price starts to slow down, you're going to get a little fatigued, and that's going to start causing loss after loss after loss after loss, and you're just going to take out all of your wins that you just made, and may even potentially take the account down for the day instead of having a positive day where you should have just stopped and walked away. So just check those things out. If you don't want to heed the advice on setting a target for the day because you're just doing well and you want to see how far you can go, that is not too critical. But setting up this maximum loss is certainly going to be critical to your success, because like we looked at in the very beginning, I mean, even if you just have one day where it ran away and you didn't have that max loss, now look how much you've already taken out. And at an average gain of $50 a day, it's going to take you an entire week, 5 days in a row of winning in order to recover this one day. But stopping it out at a max loss, you can preserve the account for much longer. So just make sure you, at a minimum, try to apply that to your trading. And that in itself is actually going to pay you back in the long run, because then the next day you'll be able to get up, and instead of saying, hey, now I've got 48% of the account I've got to recover, I only had one bad day, I'm still up and ahead at this point by $100, and I'm feeling pretty confident, and you may actually do better the next day and actually make 36. Then you do the same thing again there. Bad day, so we stop at 48, so now we still got 62. So I mean, I can keep going on and on with examples, but just by putting that in, even getting less than a 1-to-1, getting less than our average, it's still going to come out positive for us in the end. So because even now, if you hit the maximum loss because you did better that one day because you didn't suffer a humongous hit to the account, now you're still up at the end of the week. It's only 1%, but it's still a positive gain instead of being half the account down in just a week. So keep that in mind and give it a try, and you should see a pretty major improvement right away. And until the next video, I'll catch you later. I'm going to start working on the one for trading costs next, because that's going to kind of explain why it's a lot more difficult to make positive gains and so much easier to go backwards. A lot of it has to do with that trading cost. So we'll kind of get into those in the next video. But till then, I'll catch you on the next one.